Renaissance Capital, a leading emerging and frontier market investment bank with operations in Africa, hosted its 10th annual Pan-African One-on-One Investor Conference in Lagos. It was an opportunity to underscore the importance of diversifying the Nigerian economy and how it can be achieved through increased investments. In her keynote, the Executive Secretary and CEO of the Nigerian Investment Promotion Council, Yewande Sadiku, restated the federal government's commitment to an enabling business environment for attracting investments into the country.
Government's intention, because of the business case for the business environment, is to progressively ensure that Nigeria's business environment continuously gets better. The target is to be sub-100 on the ease of doing business ranking. The country didn't get to where it is overnight, so I don't believe that the country will get out of where it is overnight. But it's important to me, directional movement, where we've gone from sliding in the context of the business environment to seeing some improvement. And I will appeal to those who are anxious about how fast things are happening, that it is a big deal that directionally we are facing the right direction now. Never mind that we're still not moving as quickly as we would like. To get that sort of faster movement though, apart from what is happening at the national level, we also need at sub-national level to record improvement in the business environment. Investors invest in Nigeria generally, but in reality, investments sit in the states. And such is the level of autonomy that the states have, that it is as important to drive these improvements at federal level as it is to drive them at state level. The yellow bars indicate the movement that the World Bank recorded in business environments across the states. So 29 states in the 4-year period between 2014 and 2018 recorded marked improvements in their business environment. In my engagements with the governors, I encourage them to compete with each other for investor attention because Nigeria is, after all, competing with the rest of the world. And we would rather the competition for investment attention be between states in Nigeria than between Nigeria and a third-party country. So that's what government is doing in the context of the business environment.
Mr. Charles Robertson, Global Chief Economist of Rencap, in his presentation highlighted some of the key issues in structural reforms and diversification from oil dependency.
Nigeria's level of debt, as you know, is pretty low. That's just good news. The less good news is that taxes are very low. And so the ratio of debt to taxes, which I'm showing you on that dot there, is in line with the figures that you see in much more indebted countries. So Nigeria's capacity to carry on taking debt is a problem. And it's going to be a problem without further tax-raising efforts by the government. And as investors, we're all going to have to watch out for just how is the government going to raise its taxes so we can start to make that debt pile look low rather than far too high. So the problem with taxes, I think, in Nigeria, I got this from a brilliant economist I met a few months ago here in Lagos. He said, look at how much oil Nigeria exported per person 30 or 40 years ago. And then look at how much oil it's exporting per person now, about 9 barrels per 1,000 people. It used to be 35 barrels per 1,000 people. And the oil price was much higher back in the 70s as well. So Nigeria's budget system was premised on the assumption of high oil prices and a lot of oil. The trouble is the population's grown dramatically, and now there needs to be a shift. And that's going to be something we're all paying attention to for the next few years. Right, to the trade war. Who gets hit by the trade war with China and the US, which is probably the biggest market concern right now? Korea. And we've seen shrinking Korean trade now for 6 months. We see commodity names like Chile and Peru also potentially getting hit. Nigeria, at a headline level, doesn't get hit at all. They don't export to China. But of course, through oil, there's an impact.
Mr. Temikpopola and Mr. Charles Robertson speak further on the investment prospects and economic outlook for Nigeria.
One of the things that we thought we would do with this year's conference was to arrest and pretty much define the narrative around investing in Nigeria and situate that better. We find that people have been very short-termish in their approach to investing in Nigeria lately. If it's not the elections, it's the cabinet. If it's not the cabinet, it's some appointment somewhere. And what we've tried to do is just to say, look, let's take a step back. There are people that invest across numerous cycles successfully in Nigeria, regardless of these short-term headaches and headwinds. And we've tried to use this conference as a means to push this narrative. And obviously then also to reinforce, because a lot of policymakers listen to us, they follow this event, also to sort of send messages across on what we think are the things that need to be done to get Nigeria sort of a much better GDP growth rates. And those things are really three things. One is better education, increased literacy rates, increased investments, so sort of ratio of investments to GDP needs to go higher to the 25% level. And then the third is electricity.
I think conferences are vital. You've got to break perceptions. And people's perceptions of other countries is always governed by media. And the media likes bad news. So you get a bad negative headline, that's what people remember about a country. And then you bring them. They get to meet people, they get to see businesses operating, they get to see skyscrapers in Lagos, and they say, okay, this is different from my expectations. There's real business going on. There's 200 million people making a living and growing an economy. How can I invest in it? I think it's the biggest change you can do to an investor's perception is to get them to come to the country. And that's what the conferences are for.
The issue of investment is very critical, and we have a big gold mine. I know the NIPC DG was here to talk about investments, which is the diaspora investment. We've seen what India and China have been doing in attracting liquidity to diaspora investments. Nigeria now has the Diaspora Commission in place, and hopefully everything will start getting informed. What would you be saying in mobilizing that aspect of investment, considering what we will see every year, over $20 billion coming in through diaspora returns?
That's a good question. So I think what we would like to see is a lot more intentionality like that, as you said. There's a lot of money out there with diasporans, but intentionality, vehicles through which this money can be invested easily, also improving the business climates, changing the narrative, right? You ask anybody in diaspora today about Nigeria, and typically people tend to be negative and bearish when they just look at the outlook. And as I said, one of the things that we've said is that the story is actually not that bad. You can actually look at this from another lens. So, we feel like in all of that, right, managing the optics, managing the narrative, being intentional around creating vehicles for these sorts of capital to be put to work is the approach.
On a 6-month view, the most important thing for the Nigerian economy is the oil price. There's no doubt about that. What we are trying to address is what's going to transform Nigeria from an economy where oil is still over 90% of exports to an economy that's properly diversified. And luckily, we've seen it in so many other countries that the preconditions, what you need is quite clear. You've got to have not even a brilliantly educated population, just a population which can read or write read and write in any language. It doesn't have to be English, it could be literally any language. 70 to 80% of people need to be able to read and write. You've got to have electricity. Enough electricity for like a TV and 3 light bulbs per person. If you've got that, and if you've got education, you can industrialize. And if you're industrializing, you're taking people out of the farms and putting them into factories. With that then comes services growth as well.
The major takeaway from the opening session of the 10th Rencap Pan-African Investor Conference is the need for Nigeria to create an enabling environment that can attract critical investments that will spur double-digit economic growth.